Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within today's business world. Get ready because today we're diving into a company that is making a rather unique pivot, moving from biotech to something a bit more digital. Stick around to decode if this is a smart move or a risky gamble. Applied DNA Sciences Incorporated, or APDN as you see them, has just dropped a Form 8. Okay, so let us get right to it. The big news here is that on the 29th of September of 2025, Applied DNA Sciences Incorporated has entered into not one but two significant purchase agreements. They reselling shares and warrants to buy more shares in what they're recalling a private placement offering. Think of it as a way for the company to raise money directly from investors without having to go through the usual public stock market channels. Now, this offering is expected to bring in a whopping $26.8 million. That is a substantial amount of cash. But here is where things get interesting. Previously, Applied DNA Sciences was all about biotechnology, focusing on producing DNA and RNA for things like gene therapies. That is a pretty serious science-heavy business. Now, they're planning to use this new money for a BNB focused treasury strategy. What does that mean in simple terms? They're going to manage digital assets, specifically the cryptocurrency known as BNB, which is tied to the Binance Coin blockchain. They'll be involved in things like staking BNB, which is like earning interest on your digital currency, and participating in other related activities within the Binance ecosystem. Essentially, they're shifting from biotech to becoming a digital asset manager. This is a massive strategic change. They are selling what are called pre-funded warrants. These are basically options to buy shares at a very low price, a penny or less in this case. This is often done to effectively give investors immediate ownership benefits without the immediate need to buy the full share. They're also issuing common warrants, which are options to buy shares at a higher price, $3.82 in this case. The key takeaway is they are issuing a lot of these potential future shares. These securities are being offered under specific exemptions that allow for private sales without public registration. This generally means these investors are accredited, meaning they meet certain income or net worth requirements. To make sure that investors can eventually sell these shares, the company is also entering into registration rights agreements. This means they're committing to file paperwork with the Securities and Exchange Commission, or the SEC, to allow for the resale of these securities. This is standard practice when you're selling unregistered shares in a private offering. Then we have the Strategic DAS agreement. DAS likely stands for Digital Asset Services. Applied DNA Sciences is partnering with a company called Cypress LLC to manage its digital assets. This is where the rubber meets the road for their BNB strategy. Cypress LLC will be managing the company's digital currencies, essentially acting as their digital asset money manager. The assets under this management are the money raised from the offering and any other digital assets the company designates. These will be held in cryptocurrency wallets but controlled by Applied DNA Sciences, with the manager having restricted access for trading purposes. It is like hiring a professional chef to handle your new digital ingredients. Cypress LLC will be paid management and incentive fees. The management fee is a percentage of the assets under management, and the incentive fee is a cut of the profits. This is how most investment managers earn their keep. Applied DNA Sciences remains responsible for all the operational costs associated with these digital assets. Think custodial fees, transaction costs, taxes, and so on. So while they've hired a manager, the buck still stops with them for expenses. Specifically, there is a 1.25% annual management fee that is paid monthly based on the value of the assets managed. And on top of that, if the digital assets make money, the manager gets a 10% cut of the profits. That is a pretty standard performance fee structure. Following this, they also signed a strategic advisor agreement with Cypress Management LLC. This isn't about managing the money itself, but more about providing advice and guidance on the company's business, operations, and growth, specifically in the crypto technology sector. For this advisory role, the company will pay $60,000 per month and crucially issue warrants. These warrants represent about 9.5% of the company's outstanding shares once everything is considered. This is a significant equity stake for an advisor. Now, this is where the plot really thickens. On the 28th of September, the Chief Executive Officer, Judith Merah, informed the company of her intention to step down from her CEO and president roles, effective the 29th of September, the same day these agreements were signed. She is staying on as chairperson of the board for a bit and then just as a board member. She is getting a severance package. The company will pay her $340,000 per year for a short transition period and then a lump sum of $400,000. Customary releases and confidentiality agreements are included. And who is taking over as the new CEO, Clay D. Shorrock, who is the Chief Legal Officer? This appointment is also effective the 29th of September, the same day the veteran CEO departed. It looks like a planned transition, likely coordinated with the new strategy. Alongside Shorrock's promotion, Beth Jansen, the Chief Financial Officer also has new employment terms. Their base salaries are set at $400,000 per year. Both Shorrock and Jansen are also receiving significant time cash bonuses, $175,000 for Shorrock and $150,000 for Jansen, and stock options valued at $200,000 each. This signals a strong commitment to the new leadership team as they navigate this strategic shift. There is also a section on placement agent warrants. This relates to how the company is paying its placement agent, Lucid Capital Markets. They acted as the sole placement agent for this offering. The placement agent gets a fee of 7% of the money raised and warrants to buy 5% of the common stock sold. The exercise price for these warrants is 1/15% of the offering price. This is pretty typical compensation for investment banks in these types of private placements. Finally, the company also issued consulting warrants to Ground Tunnel Capital LLC, who provided advisory and marketing services. These warrants are for 1% of the fully diluted outstanding equity upon closing of the offering. These consulting warrants are also being issued under a private placement exemption. So, what do we make of all this? Applied DNA Sciences Incorporated is making a bold and rapid pivot. They're raising a significant amount of cash and immediately channeling it into managing digital assets, specifically BNB. They've brought in new leadership and incentivized them heavily and have partnered with specialized firms to handle the digital asset management and strategy. This transition from biotech to digital assets is a huge gamble. The stock market can be very volatile for companies in the cryptocurrency space, and the regulatory landscape is constantly shifting. On the flip side, if this strategy works, the potential rewards could be substantial. They're entering a growing market, and if their BNB strategy is successful, it could significantly boost their financial performance. The fact that they're going from high-tech science to digital currencies shows a willingness to adapt to what they perceive as better opportunities. However, the key risks here are market volatility and the inherent complexities of managing digital assets. The old biotech business seems to be taking a backseat, and this new digital venture is front and center. It is a high-stakes game, and investors will be watching very closely to see if this strategic shift pays off. Alright, that is our breakdown. What is your take on Applied DNA Sciences Incorporated's massive pivot? Is this a genius move for the future or a risky bet that could leave them exposed? Drop your thoughts in the comments below. If you found this deep dive helpful, please hit that like button and subscribe for more corporate decoded content. And don't forget to join our Discord community. The link is in the description for more discussions. Thanks for watching. See you next time.